Thank you very much for that very warm welcome. And it's my pleasure today to lead this panel discussion with my esteemed panelists. I myself am Pascal. I work at the Arab Bank in Switzerland. We're a private bank who have been exploring digital assets and navigating the regulatory landscape since 2017. And we've developed a special offering, a diverse offering of digital asset services for our clients, starting in 2019. And we're going on into that space. We have here Lucas. He's the Deputy CEO of Bitpanda and brings a unique perspective from a leading crypto platform, providing insights into how the crypto industry views the readiness of traditional banks. We also have Anastasia. She's the CEO of Fidium Group, and she offers a perspective on digital asset management and legal considerations in adopting crypto solutions. Kurt is the head of strategy and innovation at Raiffeisen Landesbank, a major traditional banking institution, providing insight into the readiness and challenges facing banks in integrating crypto services. Then we have Urs. He's the head of custody and digital assets at Landesbank Baden-Württemberg, and we will discuss the regulatory and risk management perspectives of a traditional banking entity regarding crypto adoption. Then last but not least, we have Jean-Marc. He's the CEO of Société Générale Forge and will share his expertise on how Société Générale is integrating digital assets into the banking infrastructure, offering insights into the future of tokenized financial services. So just to give a quick outline, we're going to open the panel discussion with a general question for each panelist, and then we'll move into more focused questions. And if we have time at the end, we'll open up to the audience for one or two questions, and then we'll just summarize the whole thing and continue with more panels of the day. So to my dear panelists, to start, could you each give me an overview, a 1-minute overview of how ready you think the banking sector is to offer crypto solutions to corporate and individuals? And are we seeing a more active approach, or are banks still very cautious?
Sure. So, hi everyone, also from my side. Great to have you here today. I think it's a very cool conference, especially this year. Why? Because probably that fits directly to the question, right? I think we can observe now, compared to a couple of years ago, that the traditional financial service industry, the TradFi world, and also the crypto world, that's me here, are coming step by step nearer together, right? And this is great to see. And I personally believe there's only mainly to one reason, right? It's MiCA gives here in Europe regulatory clarity. And it for the first time opens up how banks and crypto companies, digital asset companies cannot just collaborate, but how banks actually can treat crypto and can also treat digital assets across their service offering. Years ago, this would not have been imaginable, and nowadays we suddenly sit here and it's possible. So I personally believe that we are just on the start of that journey, maturing a whole industry, the crypto industry, into what the future actually will be a part of the financial service industry, and that's a very interesting thing.
Anastasia, what's your take?
We celebrated when MiCA was finally adopted. As a fellow crypto service provider, we have regulatory clarity. We can come to our esteemed partners and previously rivals in the financial sector and actually have a common ground how we can work together. So it's only the beginning, and we see how much work is being done. When it comes to where the banking industry stands right now, I think there are amazing trailblazers. And banks, some of them are indeed more cautious, and fairly so, because for so long, crypto was just the Wild West. So a lot of work needs to be done, but I believe that all of us, and especially people on this panel, are doing just that.
So banks, are they ready or are they cautious?
I would say they are ready, and they have to be ready, and I would probably like to turn the side a bit away from the regulation perspective that was just mentioned, but looking at the customer perspective. Customers have been ready for years. They've been telling us for years that we need to be ready. So at least within the Raiffeisen Group, we are ready. We are having an offering for customers. And I think the crypto industry is here to stay. Regulation just supports it. And I think that's the confirmation that this is not something that's going to go away. So from our perspective, we better deal with it. And to take it from a customer's perspective, if customers demand offering, we better provide them with an offering or they're going to get it somewhere else.
Thank you. Jean-Marc.
Good afternoon, everyone. Now, I think no banks and financial institutions, generally speaking, have embarked in a train, and the train has now left the station and won't come back. So obviously, there are different degrees of maturity when it comes to crypto and digital assets with institutions, but all large financial institutions have no crypto-dedicated teams. They are focusing on different use cases, different type of services. But just witnessing what is announced in the market, I think we can definitely recognize that there is an incredible increase in the speed of adoption. It takes time to build the solution. Just with us, for instance, speaking for Société Générale, took us, for instance, 2 years just to get a crypto license. Took us an additional 1 or 2 years to adapt some of the systems we run internally to be able to provide digital asset services, issuing security tokens. We issued also a stablecoin, as you may know. So it's a long journey, but we definitely see the adoption rising with our clients and with our peers in creating this interconnectivity we need to scale those solutions. And I think we are indeed at the beginning of a scaling phase and not in an early adoption phase. The value proposal has been demonstrated. No, the train is accelerating.
Happy to close the round here. I cannot remember a year where we've seen so many, announcements and activity in traditional banking with regards to crypto and to digital assets. And not only have we seen announcements, we've seen deals, right? We've seen big volume deals, and I think even the most, let's say, conservative traditional banks have realized that digital assets are here to stay. They will not just go away one day. And I think this is the big thing that we all kind of, observe here.
Thank you to each and all of you. So now we get into the fun part. We go into the individual questions where I can start grilling each of you. So Kurt, the first one's going to be for you. So from a retail and corporate customer perspective, how important is it for traditional banks to offer crypto services? And do you see a distinct difference between the retail or individual and the corporate segment?
Well, thank you. Let me start to pick up on what I said before. How important is it to have an offering at retail? I think it's immensely important to not ignore the fact that investing into digital assets is not for youngsters, but it's developing to be a mainstream type of investment, right? We saw a lot of funds move away from our checking accounts, our current accounts to crypto platforms, right? And then we said, well, what is the alternative you have? Either you have these funds move out and customers are going to change their main banking relationships, going to change their secondary banking relationships, and you're going to lose them after all. Or do you adopt the fact that this is an investment class that is to be taken serious and you provide an offering, right? I think that's one angle. The second angle is that the traditional investment offering, very advice-based, is not for people that want to make quick decisions, that want to make convenient decisions, that want to invest while watching a football game, right? It's all a very lengthy and cumbersome process. And then, at least in Raiffeisen, we came to the decision and say, what do we do? Do we build on our own or do we partner, right? And we found a great partner with Bitpanda to integrate their Bitpanda technology solutions offering for retail. We've launched that in January 2024, I think as one of the first traditional European banking institutions to do so. And we're seeing great success, right? So is our banks ready? I can just say yes. Are retail customers ready? I would also say yes. For us, the two numbers that I can share, 75% of customers that do use the crypto product did not invest with us before. So we're really addressing a whole new segment. We're capturing an audience that we did not have. We're proving the people wrong that told us we're going to cannibalize our traditional investment offering. And I would also say this whole combination of crypto investing directly from your bank account also proves in numbers that, and Lucas allowed me to share, so the average trading volume that we see is about 4 times higher than in the Bitpanda retail business, which I think proves the fact that finding this captive audience where you integrate does make a lot of sense. On the corporate side, I would say on our side, we're still looking for the perfect use case. I'll be honest, we've not found it yet. There are some tendencies in the small and medium-sized enterprise segment where we're getting demand, but we're definitely much more advanced on the retail side.
Thank you. Thank you so much for your detailed answer. Just to follow up, Anastasia, from a legal standpoint, what do you see being the main challenges or hurdles for banks looking to develop a crypto offering?
I think it all starts with the bank's risk appetite and the ability just to digest this immense operational expenses. As Kurt, you mentioned, with Bitpanda, you implemented this amazing retail wing and solution. For many other institutions, it's just not feasible. What we see from our side, actually, it is more opposite. It is fairly easier to integrate solutions for your corporate clients that are really much more risk averse. They have their larger legal teams. And it's just much easier onboarding overall because they are more or less sophisticated investors, if you will. Again, with MiCA and Basel regulations and everything what Esma is saying, everything is becoming easier and markets, instead of this massive fragmentation, we're getting harmonized. But it's a process. And it really varies per jurisdictions what we see in the customers. We see that customers from Nordics and Eastern Europe, they're much more eager to adopt, as well as France and Benelux entities, for instance. It is a very interesting landscape, even though now regulatory burden, it will slowly get smaller because we have clarity, right? So it's a good time to be, and it's a very good time to start doing business and co-integrate a lot of different solutions.
So yeah, with the market clarity and the regulations, most probably the European market is more advanced than in the US.
Yes and no. In the European markets, we do have regulation. US has most of the liquidity. There are a lot of transactions that are happening intercontinentally. It would be between Canada, that actually has fairly robust and working legislation there as well, European Union and Australia. Interestingly enough, we have UK that is sitting more or less isolated because there is a clarity, but not enough. And a lot of companies are leaving that environment and coming on the mainland.
Thank you so much. So Lucas, from a perspective of a crypto native company, what do you think banks need to do to prepare themselves for crypto integrations? And are there specific technologies or strategies that they would shift into or would need to shift into?
I think the most important topic, if you're a financial institution, is not to think about how can you enable crypto as an asset class or digital assets in general. It's much more about how much business is your customer base and the user base already doing as of today, but simply somewhere else instead of your platform and your business. And the reality is, you just need to look into the payment flows. You need to look into the payment flows of where are your customers as of today sending their fiat money to crypto platforms, or your corporates to simply acquire crypto assets and Bitcoin, for example. These actually are studies which are quite easy to do, which I also know that some of our partners, like Raiffeisen and Kurt, have done, just to identify what is the potential here, what you currently are missing out. And that actually gives you already a quite good understanding about the revenue case behind it. And then this should lead to actually doing projects in that regards. Not coming up with, oh, does it technologically wise make sense to go into that space? In the end, it's a business case and it's a revenue driving business case, which is not that often in the banking world.
So thanks for that. Jean-Marc, given your experience at Société Générale Forge, how do you see traditional banks adopting tokenized financial services? And what role do you foresee for institutions in that space?
Yeah, sure. So, as I said, it's a long journey, and people have started at different times. At SocGen, we started the journey 5 years ago. To go to your question, I think we tend to see these developments in two different pieces when it comes to crypto and blockchain. First one, everything which do concern, obviously, pure crypto, like offering services on Bitcoin, Ether, and crypto assets. And a second one, which is actually of higher importance ultimately for financial institutions, is the ability to run our core activities, meaning on securities, on-chain, and bring security market on-chain with everything it entails, including collateral management and derivatives products. It's two different dynamics we are seeing here. The first one being primarily driven by customers. We see high customer demand across the spectrum from retail market, online banking, private banks, very capital market niche strategy. On the second hand, the demand or the need is more driven by financial institutions themselves in the need to improve their processes, to bring more efficiency, better quality product, faster settlement, and reduce risk to the clients. And that's a little bit what institutions try to bridge today and to bring to the market.
Thank you. Urs, given your recent experience supporting corporates and financial institutions in issuing crypto securities, how do you see the demand evolving? And do you believe that traditional banks are well positioned to meet this demand? And what challenges or opportunities do you foresee in scaling these services?
Happy to give my view on that, Pascal. We have, as LBBW, helped clients over the last 3 months to issue tokenized bonds with a volume of roughly 500 million euros, bringing that to the market, which is by far more than I think we've seen last year and the year before and the last years. Where these transactions coming from? The transactions are clearly coming from, issuers who are willing to, tap into tokenized bonds. So it's clearly from the supply side. It's driven from the supply side. Our job as bank is bringing together, the issuer and the investor. So are we positioned in a smart way? Yes, of course we are, because that's basically the job. The question is how to make sure that, the issuance meets demand. And we have a very strong franchise in, tier 2 German asset managers, savings banks, which is maybe the most traditional and, bank you can think of. And we were able to really, bring these deals and issuances to these investors by, explaining a lot, by helping out in NPPs, by making transparent where differences are between traditional bond and, the tokenized bond. Challenges are still there because it's education. But I think in terms of position, that was your question, I think there is, let's say, a certain positions that bank can play in that field.
And you were referencing the bonds market. Have you seen any other interest in tokenizing other real-world assets? Or are you focused more on the traditional financial instruments?
At least for LBBW, we're focusing very much on the traditional instruments, to be fair, but happy to get other views here from the panel.
Can I add one? Because we are active in the field as well and offering tokenization services to our corporate and financial institution client already in production. And as I said, the number of transactions we see coming up and the volumes are increasing steadily. Where we see the highest demand coming from on our end and considering our market positioning is indeed for financing through bond issuances, because as you may know, the bond market is actually very efficient according to crypto standards and other standards we find in the more traditional financial markets. So bringing the speed and the ability to bring traceability, transparency, and programmability within the asset itself, like for instance, hard coding a coupon payment within a bond is a very powerful use case there. And as an extension to that, the second largest demand we see is for structured products, where also we can easily imagine that bringing within the token a formula, a payoff, is a very natural move for the market to go.
With Société Générale being based in France, does the exchange, like I don't know, in Switzerland, the sixth, does your local exchange also support that initiative?
Well, exchanges we have in France, there is one actually, is, I must say, not that involved into these topics, but well, I would say at the end of the day, it's not that important because anyway, clients are global and these markets are global. And we are engaged ourselves in, bringing more adoption to this product by listing our issuances and notably the euro convertible stablecoin across multiple venues. And we just announced this morning the upcoming listing and availability of the euro convertible with Bitpanda. That's what we aim for in the coming months and coming weeks, bringing more liquidity to this product by hiring more market makers. Liquidity is key in this market. I think here also leveraging the ability of a bank, bringing the transparency, the know-how in financial structuring, the security of such an important asset, which are stablecoin. Again, leveraging on what a bank could bring in terms of collateral management and structuring capability is probably a valid value proposal for customers.
Great, thank you so much. Anastasia, coming back to the point and the difference between institutional and individuals, what are the main legal and risk considerations a bank needs to undertake when offering these services to corporates versus individual customers?
Well, I think first of all, it will depend on the main focus of the particular banking institutions. With some of our banking clients, when we work, some of them, especially those younger, newer challenger banks, they're very focused on one particular type of client. It can be SME, it can be digital companies, it can be e-commerce. Those banks, they really fully grasp, and of course banks are not strangers to heavy regulatory lifting that they have to do for their normal banking activities. So adding MiCA, it might be shocking for crypto companies, but for already regulated financial institutions, it's not that hard. MiCA is very similar to MiFID II in many ways, right? So it's not news. The key is when financial institutions select, are they targeting retail or corporate and what type of corporate, then we're coming back to the use cases and the risk associated with every use case. Let's say if somebody wants to offer staking, a lot of staking products right now in the crypto market are kind of semi-broken, and that includes liquid staking and liquid restaking as well. There are a lot of counterparty risks and some third-party risks that crypto industry is tolerating, but it's really above the banking and financial institution level tolerance for that particular risk. When it comes to remittances and payments in stablecoins, it's a fairly straightforward, but then again, stablecoin does not equal stablecoin. And there is a lot of mess in the market that's happening right now. So it's one of the very interesting use cases that we're solving is centralized and regulated MiCA versus DeFi that has been left alone essentially outside MiCA. But as we know, USDC equals USDC. But knowing all your transactions that happened with that particular USDC up till ages ago, it's very important now. It's still fairly messy if we really dive deep and start structuring different products and use cases. But the key points are risks, operational risks, training compliance departments on not only QAC and QAB, banks do it better, much better than the crypto industry does, but also know your transactions and know the dark pools and everything what's happening now. So effectively, the risk managing for retail customers that come less prepared and they're sometimes not aware of those questions. Why bank is asking me all of that? Sometimes might be tricky for smaller institutions. With large institutions or those that service companies, it's very straightforward. We see a lot of customers are so well educated on what they want, how they operate, and they do accept all regulatory requirements.
What would, from a banking perspective, what would be easier, the corporate or the retail? Okay, Anastasia.
Oh, I was looking at the banking colleagues. In my opinion, corporate.
Then Kurt, I know that Raiffeisen, how are you addressing these issues at Raiffeisen Bank? And what are the risk management strategies in place for these different client segments?
Look, for us, it's a learning journey, right? So when I first brought up the idea in our board, I didn't have many friends, right? But it's about educating the people. It's about educating risk people, compliance people, legal people. And for us, the key to success was partnering, right? You don't need to take every risk on your own. You don't need to handle every process on your own. Work with the best partners in the industry. And I think where we got confidence within the I would say second line of defense teams is when we got their attention to understand in detail, right? To understand how does regulatory outreach work, how does transaction monitoring work, how does KYC work, and how can we align the processes of our partner to our own. And I think what was also what's a key risk mitigation issue from our side was because at the end of the day, from today's perspective, we don't yet take any risk on digital assets or cryptocurrencies or whatsoever. So the only risk basically that's left is reputational risk, right? And so the risk mitigation question on our side was, who is the right partner that we work with? Have they got, proven regulatory compliance? Do they do proper outreach to regulators? And once I think the teams in the second line of defense in our banking group understood that we are having a partner where we can align joint communications to a regulator, where we can educate regulators about what we're doing together, these discussions got a whole lot easier. And I think for us, it's going to be a process. And maybe we're going to take more and more responsibility on processes in-house. But in order to have something, as I said, having the customer in mind, being first with the customer, being quick, I think this partnership approach is good for us. And all the teams internally have learned a lot. Bitpanda from us, our guys from Bitpanda, and I think this joint learning journey will help us over time to get more confident in broadening up and taking more responsibility and risk on our own.
Sure, thank you. Lucas, that just as interests me to understand. I mean, Bitpanda was one of the early movers. How was the exchange with the regulators back then? Were they open to discuss? How did you guys come up with the correct framework and licensing? And how did you comply? Maybe you can give us a bit of a backstory to that.
Absolutely. I think the backstory goes back, and our Bitpanda is end of this year 10 years old. It will be 10 years old into the space. And 10 years ago, as probably all of you can imagine, there was nothing else than no clarity at all. So everybody was not even knowing on the regulator side what crypto is and in general how to treat that. And we learned very early on that the most important way in that regards is to deal them as partners. I mean, a regulator, a supervisor, and it doesn't matter if it's in Austria, in Germany, in France, in Spain, or in any other European market, is always just about understanding the risk he's supervising. And about the planability of you and the collaboration with you. So I think the most important takeaway in these early days for us was it's important to manage these type of stakeholders so that they just understand you totally and they understand you fully to assess the risks of us at Bitpanda, for example, for them as a regulator. And that learning in our early days enabled us to not just acquire 13 different crypto registrations and licenses across Europe, including a German BaFin license, but also to be MiFID II compliant with our securities brokerage license and e-money licenses. Why? Because it's always the same. It's about assessing risks and managing risk from a regulator perspective, and therefore for us it's about managing our regulators, which just only can be in collaboration and not against them. And it's also, just to ready that over for the stuff just discussed, right? It's the same with within a bank and their relationship to a regulator, and when it comes to how to offer crypto as an asset class out from a bank to their customers, it's exactly about the same dialogue. And we and our partners, we're always approaching the relevant supervisors together to exactly do that, to explain it to them and to make them able to assess the risks associated with it. Yeah.
Sure. Thanks for that. So I want to pose a general question for each of the panelists, and I recommend Urs to start. We work our way down the panel. So looking forward into the future, what do you see being the biggest opportunities for the banks in the crypto sector? And do you see a trend towards more collaboration between traditional banks and crypto firms? Or are banks going to do this alone? Or is this working together a vital part?
I would like to emphasize a bit on, a challenge, because opportunities, I mean, look in this room, there are many opportunities. On the challenger side concerning traditional banking, I think one challenge we face is lack of knowledge, to be honest. Yeah, I mean, the talent and the knowledge when it comes to crypto, to digital assets, cannot be found usually in traditional banks, right? It's found in crypto companies, it's found in fintechs, it's found here. And I think, I wouldn't even call it a trend, as you described. Will it be a trend continuing? I think it will be a situation that is going to last for quite some while, because traditional banks, need, and I think it was laid out by Kurt earlier, traditional banks will need to tap into the expertise. And where do you get it? You get it in exactly these kind of companies. So this is something we will be doing as LBBW. Another way why we should do that is we need really, expertise and knowledge on the second line of defense topics. And I'm not going to say, that compliance and audit and legal and so on have no expertise in digital assets, but those are for sure not the enthusiasts which are in the room, but these are the ones that you have to convince. And we do that by, partnering, and this is the way we're going to do it forward.
Sure. So you see there's going to be a deeper integration or collaboration between the banks and these fintech companies?
From my perspective, a clear yes.
Jean-Marc?
Yeah, very clear. For us, the biggest opportunities are basically in stablecoin, custody, derivative, and lending. I think that's massive.
And working with external service providers in order to enhance those offerings, for sure.
Of course, as always, you need to be pragmatic and pick the best of what is out there. Know what is your own job, where your strength lies, and then try to figure out the best and quickest way to deliver solutions to clients.
Thank you, Kurt.
I would argue that offering digital assets as an investment class to retail customers is going to be a must-have for everyone over time. Nobody questions whether retail banks offer savings books or whatsoever, right? It's just a must-have. And I think that's going to develop. And to the second part of the question, I think not just in this space, but generally we'll see a lot more partnerships between traditional banking institutions and fintech, because let's admit it, what we're not good at is building technology. There are people that are a lot better than building technology than traditional banking groups. And I think we're realizing this over time. So I'm very positive that this trend will not remain a trend, but it's going to be a fact that we're looking for the best in the industry to partner with us.
Maybe just a quick interjection, Lucas. In the future, when these exchanges become so big, what do you see the hurdle of an exchange becoming a bank versus a bank becoming an exchange, or integrating the exchange service themselves?
I think what we will see in the crypto world exactly is a split like in the traditional financial service industry. Exchanges will be liquidity providers, and the liquidity will also go to the traditional exchanges, also for crypto as an asset class, I'm convinced. And companies like Bitpanda, we are a crypto broker, we are a crypto platform facilitating exactly such services. We are a platform provider, and we are an infrastructure provider to banks and other institutions who want to tap into that asset class and tap into on-chain activity in the end.
Okay, coming back to the general question, Anastasia, the opportunities over the next 5 years and the collaboration between traditional banks and crypto firms, what do you see happening?
I think there are three ways: building, buying, or partnering. And depending on how big the development teams are or what are the internal priorities, every institution, including both banking and crypto firms, will take one of those paths. If you're great in building, and smaller fintechs and crypto, we do tend to be better in that, then we'll partner with someone or banks will acquire us. We already saw MasterCard acquiring CipherTrace as an example. And CipherTrace, same as chain analysis, it's one of those backbone services that need to exist and run effectively for institutionals to adopt even crypto. So when it comes to partnerships, and overall mergers, next 5 years will be filled with consolidations. Crypto firms consolidating with one another, banks buying and selling different arms and venture arms. As colleagues already said, crypto here is to stay. that both retail and SME and institutional interest is massive. And with MiCA and with this regulatory clarity that I'm keep emphasizing, it will only stay. So the path will be. Remember the times where fintechs were competing with banks, and then a lot of them became very big. They went bankrupt, or banks bought them. Crypto will be the same.
Lucas, you have a different opinion?
I think going bankrupt, hopefully not in crypto anymore. That wave is hopefully behind us. But I think
Fingers crossed.
I believe so. I think it will be a consolidation game, right? A consolidation game. Why? Because suddenly we see one thing: companies which have developed the crypto industry as of today only due to one reason, that banks and the whole value chain of the traditional financial service industry was not touching at all the technology and the asset class of crypto. That was the only reason why players like us even exist, right? Otherwise, I mean, Kurt would have offered it directly and the business never would have occurred. So, long story short, I think, yes, the consolidation game is absolutely imminent and will happen across the whole value chain. And especially, I think it will start in Europe due to exactly that regulatory clarity. So that will be a very, very interesting game over the next couple of years, while it will bring in the end to, from a customer perspective, the highest value possible, because it will integrate a high-risk, high-yield asset class, crypto, and also the advantages of blockchain technology for stable coins, for payment tokens, for any other type of tokenized asset across the whole value chain of the traditional financial service industry. And that only can be beneficial if you get new technology into that old world.
Sure. So I want to open the questions up to the public. If anyone out there, being an individual or a corporate, wanting to open a bank account for crypto services or high net worth individuals, if you have any questions to the panelists, please feel free and raise your hand. No questions? So then, coming back to the panelists, we don't have any questions from the public. Anything else you want to touch on to elaborate on the questions posed before? No? So then I would suggest wrapping up with a 30 to 40 second summary. If there's one takeaway that the audience can take with them today regarding the bank's readiness to offer crypto services, what would that be?
One takeaway, I think, is exactly looking on the business case. Doing digital assets or tokenization for the sake of doing tokenization of digital assets is completely useless. What it really is about is what is the value add you integrate as part of your business. Why? Because in the end, it is a revenue-driving game. And I think realizing that is helping you convincing a lot of second-line functions, as I already said, and other stakeholders in the bank on exactly that business case. And in the end, it boils down to exactly that. It's just a business case.
Thanks. Anastasia?
Crypto, banking, and digital assets are now being used in the same sentence without negative connotations as it used to be. And first of all, it's already an amazing achievement, even though there are still so many hurdles for operators on the ground and companies that sometimes want to try it. And it can come from their inexperience or lack of knowledge, or maybe some providers that they're not happy with. But it's very interesting to see this industry is that I remember participating in the conferences 5-6 years ago. This panel would be wild. We would be almost screaming at each other. And now we're sitting and discussing how we're co-integrating and services our customer base. This is wonderful.
I would say the revenue case that Lucas described is based on a very clear customer demand. And numbers and facts show that. And I think it's our job, especially in retail banking, to give customers freedom of choice. And crypto and digital assets and investing in those is a choice customers are making, and that's why we're here to serve them.
I would say Bitcoin is no longer a slang word when we are sitting in a bank. We are clearly behind a no return point where, again, solutions and services will be brought to clients. Depending again on the banks, it will be different areas, different use cases, but clearly it's going to happen anytime soon and sooner than what people may think.
Given what we've heard on the panel and what we've seen, in terms of transactions in the last weeks, I think I could clearly tell that, we have left the phase of MVPs and POCs behind us. We're talking business here, and we're seeing natural deal flows and ticket sizes, and this is what I take away, and where I'm going to see some more deals to come, and this will continue. Yeah, and I'm sure when we meet next year, we're not discussing 100 or 300 million deals, but larger ones, maybe even below the 500.
So thank you all. Thank you to my panelists. I think in order to summary, it's fair to say that the banks are ready. The banks are already offering services either on their own initiative or through integrations with existing exchanges. So there's deep collaboration in that sense. And then if you want to take it a step further, there's many other solutions out there offering KYC AML tools to crypto service providers and banks, enhancing their ability to actually challenge this and navigate this regulatory landscape. So yeah, banks are ready, and it will be interesting to see how things evolve in the next 5 years. And I just want to thank all my panelists for their contribution today, and everyone else enjoy the rest of the convention. Thank you.
Thank you.